Hey, what's happening, everybody? Happy Friday. Welcome to the Pulver Report. Let's go ahead and get started. It is the 28th of January. Nice to see everybody. How are we doing today? If you're out there typing a wire, yes, if everything's coming through loud and clear. I'm switching up a little bit today. We're using a little OBS software. So I've got my title slide. Let's go to the risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Stocks, options, futures, forex, cryptocurrencies, you know the deal, right? Also, if you're following me out there on social media, I just spent this week trying to revamp and get everything up to speed with my social media channels. So youtube.com/Chris Pulver, also streaming on Facebook, Instagram, Real Chris Pulver, Twitter, Real Chris Pulver, Twitch, just updated the channel to my name, Chris Pulver, and TikTok, Real Chris Pulver. So you can find me out there on the respective social media outlets. I am also posting more shorts. So trying to get like the old 1 minute or less video on TikTok, the 45 to 60 second video on the YouTube short, as well as the full 10, 15 minute videos that I produce every little bit on YouTube. In addition to our live channels, of course, the live sessions Mondays and Fridays for the Poll Report. You know the deal. All right. So hey everybody, how we doing? I thought I'd switch things up a little bit. Let's get into the charts. Can you see me? Hopefully I am clear. Coming through on this fancy little green screen. I'm popping out at you on the screen. All right, let's take a look. So pre-market, everything is down. We are looking at the 430 pre-market on the SPY. I did take some nice profits today. Let me see if I can update my MyFix book. I just closed out a big chunk of profit on the dollar Swiss. I'm happy that I did. It didn't update yet, but I did close out about 12 positions positive on the dollar Swiss. I'm just booking some temporary profits. I'm still in dollar Swiss. I'm still holding positions. I'm still long in dollar Swiss going after 9,600, 9,650. So here is the chart. And I have all these pending orders. This is also for my newsletter, pulverreport.com. If you were buying this at 9,250, you are in, you're in profit. We started talking about this around like 9,200. So some pending orders that are stacked to the upside. Buy at 91.88, buy again at 92.50. Just stack this thing all the way up. Now, I will say this. If I see price pull back on this dollar Swiss, pulling back from today's weekly candle, and let's say we come all the way back down to 9,100 again, I'm still going to buy and I'm still going to hold long on this instrument. Alrighty? So if we have pullbacks here, I'm still long. I'm looking at this thing going up to at least this high, but this swing to this swing around 9,600 to 9,650. So that is a big profit level for me, and I will do whatever I can to make as much money on the way there. So I still have some positions running. I took off a big chunk of profit. You can see over here, I have orders to the upside to stack higher, and I have orders to the downside to level in. So I told traders this yesterday on one of my classes. This is one of my favorite currencies right now. I'm not saying it's a sure thing, but it's as bullish as I can be on a currency, and I'm trading it. All right, so it's still going to take time. We might have a little retreat from today, but I did take some profit near the highs around 93. What were the highs today? Around 93.20 or so. Highs around 93.35. So that's where I ended up closing out. I'm looking for an update on MyFix book, but it didn't quite hit. I also took some profit on Aussie dollar and New Zealand dollar. So here we have some positions. One of my signals right there. So closed out Aussie dollar sell for 202 pips. Closed out New Zealand dollar sell for 144 pips. The dollar Swiss is a group of trades that I'll be adding up and adding into my Flex Trading Room doc. But overall, good. Okay. Let me check one thing. So the one thing that I can't see running right now is the chat. And let me figure out if I can get the chat up and running. Give me 1 second. All right, let me get some chat questions here running on YouTube. There we go. All right. Good. Joanne in the house, Donna here, Diane here. Good morning, everybody. Nice to see you. All right, leave me a comment. All good. Okay, let's move on. So, like I said, pre-market is down. 431. We're starting to fight back. We've had a ton of volatility over the last 2 weeks. Interesting discussion on this. We talked about it in Flex this week. We talked about it in Equities on Demand. I'm going to post a video on it today. That video is going to release around like 6 o'clock tonight. I'm talking about, what the markets are doing right now, why they're doing it, how to trade this year, how to be nimble. This is going to be a trader's year. I keep saying it. We might not have the market produce any highs. Like the high might be in, right? Like our best case scenario might be that I shared this statistic. Well, it's just data, but going back to like 1970, every time we've seen a either tightening cycle or a rate hike, we've seen the market 80% of the time still actually produce gains. Now, that being said, it's important to note that, okay, so we're still a month and a half away from the Fed raising rates for the first time, right? The first time this year will be sometime in March, like March 22nd. So if the Fed raise rates, there's an 80% chance that over the next 12 months, the market will be 5 to 6% higher after that first hike. All right. So does that mean that I'm going to get excited about the stock market, broadly going up 5 or 6%? No, because we're now, double digits off the highs, right? From this slide, we are sitting currently around 11% off the highs with the deepest pullback so far around 12.5. And I don't necessarily think the bottom is in. I don't think the bottom is necessarily in tech right now. Okay. So all I'm saying is a 5% jump in the markets does not get us back to the highs. A 5% jump in the markets just helps us recover, helps us balance a little bit. So I do think there are some really great opportunities in the markets to buy some beat up stocks, like stocks that actually make money, stocks that should be higher than what they are, and maybe they're 60, 70, 80% off the highs, or they are in a sector that is performing really well. So this is another thing I shared this week in my trading rooms. We watch this stuff. I think this is going to be a key tracker for us this year. Take a look at the last month. Actually, let's go 3 months out. Okay? This is tracking the best performing sectors and worst performing sectors in the markets. So over the last 3 months, this now, let's go back to like late October, November. The energy sector is by far and away the best performing sector. Then we have staples. Then we have utilities. Okay, everything else is in the red for the last 3 months. Let's go to the last month. Over the last month, everything is in red, and energy is, again, the best performing sector. Now, financials and staples are the least crappy. And what's funny is going into this year, as we kind of rotate out of growth, rotate out of technology, I'm looking at those particular sectors. So this week in Equities on Demand, we have focused a lot on energy stocks. All right, we have trades on Halliburton, we have trades on Schlumberger, we have trades on Contera Energy. We were looking at ExxonMobil as well, comparing ExxonMobil to like Shopify, to Snap, to any type of crazy tech stock, or even ARK, ARKK with Kathy Wood. The ARK ETF funds are down like 60, 70% from the highs. All right. So there's a lot of crazy stuff going on. It is certainly a mass exodus from tech, and the rates are coming, and we know that. But I still think there's some great companies out there that deserve to be better than where they are. But I'm gonna keep trading energy. I'm gonna go energy, financials, utilities, materials. Those are gonna be my 4 sectors that I focus on. So I will watch this. This is a good tool to have. All you're doing is tracking the sectors. The last 5 days. If you go back to last week's trading, you go to last Friday to today, we have seen just blood in the streets. We've seen red everywhere. Again, energy still carving out gains. Okay? So, energy sector is pretty awesome right now, and I have some credit spreads expiring today. Steel is going to be an assignment. Pre-market is down a little bit to 16.18, and I have a Jade Lizard that gives me an assignment around $19. Okay, $19 and change. So I'm going to be upside down on that trade a little bit. My ownership is going to be around $20 break even. I still like this trade overall. This is like the kind of the poster child for value. And I think eventually like this becomes a pretty well adopted instrument. I'm long CLF. We made a lot of money on it last year. I plan on doing the same thing this year. We have some good fib levels. I will probably do more credit spreads. I will buy heavier down here below $14 or so. But if we have a decent response to the upside, let's say we have this structure here. If we have something like this playing out where it's a little bit of a corrective channel and we pop right back up, okay, well, I can probably protect some profit here. I have about 500 shares running after this weekend, and if I can get 500 shares at $2 a share, I'll make some money. You know, I can repair it. I can do covered calls. I can do all sorts of stuff to try to grab a few bucks, right? Other stocks for expirations this week, HAL is Halliburton. We're trading at, wrong one. Halliburton is right here. We're trading at $30.83. I have a 29 by 28.50, I believe, credit spread. So if I don't get assigned this stock, I'm going to make a few bucks. That's fine. I was kind of hoping to get assigned on this stock. But we also have some Jade Lizards running and some options where if we do take ownership, it's going to be in the mid-20s. So this is one that I'm going to continue to buy some pullbacks. All right, if we look at the weekly time frame, there is room for this thing to keep running. I am bullish on this stock all the way up into here, like the high 30s. If you just look left, we have some really good resistance up here in the 50s. So I will delete some of these drawing lines. Take a look. Right here. So as high as, $55 back in 2018, back again here in 2017. And if energy is going to continue to run pretty darn hot, I would say until oil hits, $100 and maybe higher. Maybe we have this energy squeeze. We talked about this kind of carbon energy squeeze as the world's trying to prepare for green energy. But energy stocks will probably continue to outperform and do well and be a sector that I want to be in. Juwan's asking, are the red sectors a good place to look for beat up stocks? Well, it's funny you say that because literally every sector is getting beat up right now, But I will say this. Listen to the list that I put together. Energy, financials, materials, staples. Okay, those four sectors are what I'm going to focus on this year if I want to get rid of all of the high volatility correlations, unwinding, tech drop, tech plummet, right? Like, granted, there's going to be some great stocks that I'm going to be in. I'm going to be in PayPal. I'm going to be in Block Inc. or Square. It's SQ. I'm going to be in MicroStrategy. I'm going to be in Tesla. I mean, those are stocks I will keep buying. I'm still going to be in Apple and Microsoft. I'm still going to buy Fangman stocks. I started to trade Netflix when we had that crazy 20+% gap. I will buy those tech stocks, okay? Or, those stocks that have been beat up pretty badly. But I'm starting small. I mean, right now, one of my ugliest positions dollar-wise is ARK, ARKK. I didn't even start buying it until it was at like a 60% retracement or a 60% sell-off from last year. And it's down like nearly 80%. So I'm still down overall, but I just started small. I'm going to take some nibbles. I'm going to dollar cost average in. And, ARK has a 3 to 5 year outlook. Right now with this crazy exit of tech, it's getting hit super, super hard and is very vulnerable because, its portfolio is very tech focused, right? And I know there's other ones, but it's mostly a tech-based firm and all the ETFs are correlating with that, and they're all down pretty massively. Okay? So that being said, I mean, take some nibbles, dollar cost average, keep the trade sizes small, but I'm going to focus as much as I can in generating income in financials, energy, utilities, materials. I think those are the safer plays. Okay? I think that's where we're actually going to see some steady performance, lower volatility. I can accumulate. We can use options, lower our costs, repair it, lose it. That should be a pretty straightforward way to be actively generating some profits for this year as things are a little bit on thin ice. We know the Fed's tapering, and what makes it very fast and accelerated for 2022 is the fact that they are tapering and raising rates at the same time. I mean, this crescendo hits in March where the tapering is done for now, right? Tapering is done, and the Fed's raising rates. And the statement this week, they said that they will be raising rates probably 3 times this year and most likely 3 times next year. So are they going to stick to that narrative and say 3 times this year and 3 times next year? Or will they overshoot and say 4 times this year and then 2 to 3 times next year? It really, I think that's going to depend on how the inflation numbers come in for the first half of this year. If inflation continues to show 6, 7+% weighted, and that means real inflation is going to be 10, 11, 12%, then I think the Fed might be a little more aggressive and overshoot those interest rates and probably raise 3 or 4 times this year. Okay? So we'll find out. But good question. All right, so Halliburton's looking pretty good. PFE, that's Pfizer. This is one that I chose to be pretty bullish on this week. 53.35 or slightly down. I will take some ownership of Pfizer this week. I have a 56 by 55, if I'm not mistaken. And that's a credit spread that if I take some assignment, that is great. What I'm trying to do is take some ownership. I will look at a covered call up here near the highs or maybe just repair it for a couple of dollars. If it goes against me, I have some additional staggered credit spreads out for the next month. So if it goes against me, I've got my insurance. If it goes for me, then I'm going to try to get the stock called away around $60 or so and just keep lowering the cost. And I think this is a stock that I will stay pretty bullish on over the longer picture. I know that we've had, it's needed a correction. We had a nice little gain, but I do think that longer term, having highs around $60 is fine. This is a massive pharmaceutical company. COVID's not going away. There's probably going to be some new variant in the next 3-4 months. Who knows? But if you're vaccinated, if you're boosted, I mean, heck, the last year or two, I haven't been sick. Vaccinated, boosted, I've had little weird, am I getting sick? I don't know. And of course it's do I have COVID? I mean, I've had, I think seven tests in the last year, negative, when it's I didn't feel well, had symptoms, but negative tests. So nevertheless, Pfizer is a big contributor to additional medicine, right? They have vaccines. They now have antivirals. I'm sure it's not going to be the last one. I'm pretty bullish on Pfizer all the way up to $100. And so I'm going to look to accumulate. I treat this stock. I know they're very different sectors, but I think the price action will be similar to Alcoa, which I also like. Alcoa is trading at $57.94. Again, this is another one that I would consider owning. I like Alcoa. I've taken trades all the way from the 30s all the way up here to the 60s. And I keep buying it. I keep getting, some assignments. I keep getting covered calls at highs, and it keeps getting called away, and I keep generating profits. So I'm trying to treat Pfizer the same way. It may not be as volatile, but we'll find out. So it looks like I'm going to take some assignment potentially today on Pfizer. SLB, this is trading pre-higher at 39.13, so SLB is running higher. We have some staggered credit spreads on this one as well, in addition to a Jade Lizard out to February. So this is good. We could generate some nice returns on SLB. I'm going to stay bullish on this one overall. BAC, this one is part of my little Pulver Report newsletter. And not a difficult trade, okay? The expirations today, the 46 by 45, collected a nice premium on this one. If I'm going to take assignment, and this is what we have to consider. Traders should know this. If you're trading options, trading credit spreads, if I'm selling the 46 put and I'm buying the 45 put, if price stays right where it is, and we open in between these strike prices and close today in between these strike prices, then what happens is I would get assigned 100 shares at $46, but I still collect my 50 cents, so that comes off of the price. So my ownership would be $45.50. Now, this should be an easy repair to come back into next week, Friday, and sell a $48 call and repair this trade. Okay, repair meaning if my break even is $45.50 and then the stock rallies up and I lose it at 48. 48 minus $45.50, I could turn around maybe in the next 1 to 2 weeks and generate $2.50 per contract. So if I have 100 shares, I'll make $250. Okay? So that's what I'm going to do. I'm willing to take assignment on BAC. I think financials will also perform pretty well. BAC I like a lot. I'm in ONB, that's Old National Bank. I'm building positions. I'm dollar cost averaging. I'm using options. I'm lowering my overall cost basis on ONB. FHN is another one. Same thing. These aren't expensive stocks. They're not volatile stocks. This is why I like them. Okay, I might have to go out and wait 2, 3, 4 weeks to get some decent premium on some of these if I'm going to sell calls and whatnot. But for a steady, low volatility play, I like it. Okay, and then another one for this week, SVXY. This one goes out a little bit further. We're trading at 52.97. I'm going to go down to the daily chart on this one. So this is an inverse volatility play. And the correlation, I've talked about this for the last month or so. Correlation that I wanted to pay attention to for this year because I was sensing we're going to get some higher volatility in the markets. If we have the SVXY dip, that is because the VIX, the volatility index, is going up. All right, so when the fear gauge is rallying, is rising, is jumping, the SVXY will drop. So today, if we're seeing this going to the downside, that means that the volatility index is going higher. Okay, so I do have some plays out here. The 53 by 52 collected a nice chunk of profit. on the credit spread, but I'm putting a limit credit way down here at like 12 bucks. Because this is an instrument that even with the craziest, highest volatility, it still tends to respond bullish when volatility all of a sudden drops. And to prove it, let's go to the VIX right here. And I just want to show you kind of these. I hate to steal a word from the Fed, but transitory. I'll say temporary, okay? Look, even during the COVID crash in 2020, did volatility last months and months and months? No, it didn't. Volatility lasted about a month. We went to crazy high levels. We had a 10-year spike. It was 2008 was the last time we were up this high in volatility. So that was 2020. But you can see that within about a month, it retreated. It was up for about 3-4 weeks straight. And then over the next month, it was all the way back down to where it started. You go back to 2008 and 9, you're going to see the exact same thing. Look at that. So heightened volatility, super, super scary. And guess what happens? A month later, 2 months later, it's all the way down where it started. So volatility is a temporary thing. It squeezes, it coils, and then it erupts. And so can it be timed well? Can we make some profit on it? Yes. But does it get back to these crazy 10-year plus highs? Do we have just scary amounts of volatility all the time in the markets? No. It usually stays fairly contained. Okay? So, SVXY plays this game in the opposite way. So even if this spikes up like that, the SVXY spikes down, and I try to buy the dips, because eventually when the volatility index goes down, the SVXY will base and go up. Okay? So that is one instrument that I'm adding to the mix this year with equities on demand. Okay? All right. Morning, Denise. How we doing? Russell, take a look at MARA. Hey, quick question while we're doing this. How's everything coming through? I wanted to switch it up. Was there any issues finding the session today? So the reason I'm asking is when I do the setup on YouTube and I set it up for the stream, I can set up ahead of time so you can like view the live link. But I'm using a different software, so I'm curious. Like, did you still find the session? No problem, or did you have to look for it? Did you have to go to my channel first instead of going through like the link? No issues, easy to find. Okay, good. Just want to confirm. Excellente. Okay, cool. All right, MARA for Russ. Let's take a look. MARA trading at $20.36. Now, am I interested in this stock? Yes. Are there crazy amounts of premiums around these stocks? Yes. What is the only hesitation? They correlate a lot with Bitcoin. Okay? A lot. Now, granted, Bitcoin is hanging out around $36,000, $37,000, but this has clearly not responded to the hold yet, right? If we take a look at Bitcoin, so MARA, BTBT, RIOT, and there's like BITF. There's a few of them. I did a video on this not too long ago on my YouTube channel. I'm trying to think what it was. It was my top crypto stocks. I think I did a video on that last week or the week before. So right here, this is a video that's going to be, that was a little short. That's a preview for a sector rotation video I've got coming out tonight at 6 o'clock. Right here, this top crypto stocks video. So anyway, some of those like mining stocks, they're public companies. They're either, in China, now moving out of China, going to Kazakhstan and getting settled in North America. I think that's my only concern about jumping into them now is, like I said, there's a high correlation with the price of Bitcoin, which has been steadily down, right? Since the start of this year. Let me see where this yearly pivot starts. Bitcoin starts right here at the year. And I mean, I'm probably not going to be perfect on this, but current price, Bitcoin's down 23% for the year. Okay, we've been as far as 31% down for the year. Now, off the recent highs, this is what gets everybody scared about Bitcoin. Is off the recent highs, we're talking about a 52% correction in Bitcoin. Now, how volatile does it get? Does it get to be 70, 80% corrected? Maybe. I don't know. But as I keep saying during these sessions, as I keep telling traders during my trading rooms, I'm still going to nibble. I'm still going to take some bites at these round numbers. Every $5,000, I'm throwing in some more dollars. 45,000, 40,000, 35,000. I got some add-ons there. I did the same thing on Ethereum, 3,000, 2,500. I'm adding, all right? 30,000. If we hit it, I'm adding more to Bitcoin. All right? So I want to see what Bitcoin does. And what I'd like to see is something like this, Russ, would be a little bit more stability in the price of Bitcoin. And then we can start looking at MARA, we can start looking at BTBT, we can start looking at some of those mining plays that I talk about that YouTube video. There's like 4 or 5 that I mentioned. And they all, as far as options are concerned, they pay really, really well, which is fantastic. But if Bitcoin isn't stable, if Bitcoin is going down, they will continue to go down with it. All right, and the same thing is true on that spot ETF GBTC. Okay, this is trading at a pretty massive discount. We're trading at 24.11, 24.84 pre-market. I mean, look, one could make the argument like, hey, it's right back down to this low again. I'm just going to buy it. I mean, it's fine, but this is not officially the approved SEC-backed regulated spot ETF for Bitcoin. It's one way to trade it. Right, and it's one way right now that if you have a 401k or an IRA and you're actively managing your own portfolio, you can buy GBTC, but unfortunately there's no options on it. That's my one drawback. I did take some trades in this one, had some nice rallies, but with no options, I can't really do anything to lower my costs. So it's kind of like buy and hold. And at $24, it's not a bad play, but truthfully, I'd rather just get a Coinbase account and buy Bitcoin, right? And that's what I have. So Coinbase Pro, little off-grid ledger, all that good stuff. It's pretty straightforward to trade. But you can watch it, okay? But I just think the correlation is so strong that until we see better signs of Bitcoin bottoms or until we see better signs of stability here, which I think is pretty firm around 30,000, okay? Then we start looking for this thing to base accumulate and then probably make a run back up to 60 plus. And that will make everybody happier, a lot happier. And I'm trying to think, maybe the timing of this whole thing is Bitcoin is still not outside of the shadow of risk appetite. And what I mean by that is maybe the overall stock market needs to have some gains, needs to show some bottoms and stability, and maybe that capitulation move has to be in, and then we can start to see, people are leaving tech, people are maybe taking some profits in stocks. What will be interesting is if money is getting put into cryptos, as opposed to just going right back into the stock market. But again, there's still a lot of uncertainty around cryptos, right? So yes, a trend line break would be great, especially if you're looking at MARA. So just right here, I'll go back to that chart for you, Russ. I mean, pretty easy, right? Draw a trend line and look for a trend line break. Just like that. Nothing fancy, but let price settle in. Look left on your chart. Could it come back down to this, $9 level? We have a nice little pocket and demand level around 15 bucks. Sure, it can drop a little bit lower. It can drop down to this pivot, but I'd rather wait for some confirmation here, okay, to start positioning. And again, we can talk about it in equities on demand. I'm not opposed to taking a trade on it. But I also don't want this to turn into like, a Beachbody or a, Tilray or a OpFi or some of those where it's like, yeah, we bought it with the best intentions. We bought it dirt cheap. But I mean, my concern for this is MARA, I believe, is one of the biggest U.S. miners. So I would say that I would take MARA over some other ones. But if you've got miners that are out of China, that are setting up in Kazakhstan, there might be some there might be some disrupted, mining going on there. Maybe they had a big energy crunch and they shut down the internet for like a week or so, and that was massive news for like the second largest miner in the world. And then now the U.S. is the largest miner. I still don't think China's done mining. I think they've kicked out all the private miners, but I think there's still very much like state-run mining. I think, but we'll find out. Or we'll never find out. Who knows? Okay? All right, so trend break would be nice. All right, so we're good. So CLF, HAL, PFE, SLB, BAC, SVXY, and I have a couple more that I'll review today in class at 10 o'clock for Equities on Demand. Talk currencies for a second. US dollar index, we're at 12,294. We have a long wick to the north today, which is totally fine. I did take some profits to protect some profits. Aussie dollar short worked out great. We took a trade and got filled on it this week on Wednesday, and it was up, I believe, over 200 pips. Aussie dollar close to 203 pips. The New Zealand dollar close for 144. So those are working out great. Pound dollar shorts also in, and I'm running with my VPS. My pound dollar is up. I'm looking at my screen right here. Pound dollar is currently up 148 pips. I'm very close to my take profit on the pound US dollar. And I think for the fact that it's Friday, I've got a robot running. It came within You know, this is just me kind of assisting my robot. It came within about 30 pips of my take profit. I'm going to do this. I'm going to turn off my robot. So I'm going to remove my robot. I'm going to go ahead and take my profit on that pound US dollar at 148 pips. So I close that. So now the robot's off. I'm turning that one down, and that should pop up on my little Elite Signals recap here in just a second. I'll look for that to pop up, and I'll show you. But pound dollar, I'm going to close that position. So the pound dollar was a nice little channel trade, and I was just planning on going down to this level here. Something like that. Okay, so we can still revisit this one next week if we have this flush down, a little pullback, and then another push lower. I'll still target this 3,200 low. All right, but because it's Friday, I've taken some profit on dollar Swiss, closed out Aussie dollar, closed out New Zealand dollar. I'm up 150 pips on pound dollar. I'm just going to add it to the mix. And it didn't pop up, but it should in a second. It should update. All right, so that's fine by me. And then I'm also short Aussie yen. Okay, this one's going pretty well. We shorted this one on some of this noise around 8,200. It's down to 80.50. Up 100 pips, up 150 pips, and still looking to flush this thing down towards 79.50 or lower. I like Aussie yen. CAD yen's another one that I'm short on. And I got filled on some of this noise as well during FOMC around 90.50. It's like break even now. Not great, but I'm also going to sell the CAD yen up here at a high. Because if we have a rising wedge like this, I think this is going to be an excellent sell trade back down into this channel or all the way back down to where this whole thing started around 8,500. Okay, let's take a look. ARKQ, fudging ARK. God, you guys suck. Look at this nonsense, man. ARK is just getting crushed. Look at that. Jeez, oh Pete's. Kathy. Got to be in the hot seat, huh? I mean, it's only down 40%, but look at ARKK. 65.97. I did start another credit spread to help me balance out. I'm using that credit spread out to March if I need it. If this thing gets down to like, friggin' $60 and we have this massive capitulation flush, I'm probably going to take the assignment and lower this cost as much as I can and just try to protect this thing. I showed this to a friend of mine yesterday. If you're familiar with harmonics, okay, X, A, B, C, D. When this thing is done, we will have a harmonic pattern, and this is a high probability trade that should get us back into this merge. So ARK, ARKK, should have the ability to, again, establish some lows, hopefully, all right? And when it does, and it stabilizes, when this thing does get some bid back to the upside, a very high probability level is $100. And so as long as I'm going to take some ownership here. I'm probably going to add more with this credit spread and use that long put as my insurance policy. But I'm going to lower my cost to probably $80 or so. And if I can take, let's say I can get it all the way back up to $100, that allows me to turn a $15 to $20 a share profit. So even being upside down a little bit, I can still turn it into some nice profit. But there's a good looking Gartley pattern on a lot of these. And, that could be really simple. Okay, a really simple pattern. Okay, a really simple pattern on a lot of these tech stocks would be exactly what I said. You have this massive swing from the COVID push, like this post-COVID low and this big swing. So you have one, and then you have this is considered the X, okay? So you have the X right here. Let me start that over. So this is your X. Then you have an A to B to C to D. And wherever this settles in, that's your harmonic pattern. This is a common one. There's a bunch of different ones, but X, A, B, this B is down here. Okay, this is your C. I didn't draw that very well. And this is your D. Okay, forgive my dexterity. But what I'm saying is the trade that I like is eventually when this low is in, when this thing capitulates down and gives you a falling wedge or gives you some bottom, starts to push up, then we trade it back up to this. We trade it right back there to the merge. All right? And as long as your break even is below that, I think that this is what I'm looking at for any trades that I'm down, like heavy in. And I say heavy, like I'm down a bunch in like dollars per share, but my overall position and risk percent is pretty light. I don't trade aggressively. So anyway, my probability is getting it back to those levels. So ARK is on the radar for something like that. MicroStrategy, same thing. You know, PayPal, Square, like all those tech stocks that are just getting crushed right now. Snap is another one. I took a trade on Snap, and it's probably trading below 30 bucks. It is, and I already cashed in on my long put, which sucks. I cashed in like for $6.90 in like 2 days. So that means my break even is going to be like $31, maybe slightly less than that. But again, it's like, how low does Snap go? Snap has a massive user base, and you know, maybe the stock price is so beat down that it just becomes like this perfect candidate to be bought out. So we could have an interesting year ahead. All right, I'm just going to get some summaries going here. So look, here's the reality. 2022 reality. Fed is tightening. The Fed is tapering. Fed is raising rates, right? And again, the median was this weekend, Wednesday, 3 times in 2022 and 3 times in 2023. That's what they're telling the market right now, okay? Now, we will continue to see how this narrative plays out. You know, what the Fed is also willing to do is if they are tightening, the stock market's not going to like it, all right? And so there is this transition from tech or growth into value. And that is what we are seeing right now. That is why this is so ugly, where you're looking at like the NASDAQ is like way worse off than the Dow, right? And you know, stocks like I just showed you, like ARK is just getting absolutely smoked. Snap is down, you know, 60, 70% from these highs. So take a look at this right here. It is down 66% from the highs. Peloton was down 85% from the highs. You know? So all I'm saying is, I want to focus on less volatile sectors. Actually, I'm not going to say less volatile, because volatility still means opportunity. I'm going to focus on less sensitive sectors. Okay, so the less sensitive sectors would be, I'll put energy last, because energy is going to be the most volatile. Financials, not very exciting, but stable, right? We're not seeing very much sell-offs at all in financial stocks. Materials and staples. You could probably even argue utilities because of inflation. I mean, everything's been going higher, okay? And then I'll put energy in there as well. Now, energy's been great because we have volatility, and I think that it's probably one of the more bullish plays that I'm in right now. But the reality is, look, the market doesn't like it because the Fed's never done it at the same time. We've had years and years and years of tapering, okay? And then we have a rate cycle that comes after the fact. Because we had, I mean, and just think about how extreme everything was from 2020 to now. You know, we artificially engineered a bottom, avoided another crisis, avoided another recession. We threw $6 or $7 trillion out there in the global supply. It's such a ridiculous way to just not let the market be a free capital market anymore. That's what's so silly. It's like we did this twice in the last 14 years. So you can see why the market is just making this happen faster, right? But the reality is we're going to raise rates this year, and whether the market likes it or not, traders and investors have had a decade plus, and certainly the last 3 years, to protect the highest highs we've ever seen, you know? So if the complaint is, well, the stock market's not going up. Well, you're a fool if you've had one of the greatest decades of your life of, you know, investing, actively investing, saving, whatever. And now it's like you're facing a correction for the first time. You know, 2020 was like an anomaly correction. It happened in a month, and then 2 or 3 months later, it's back to the highs, right? It was an anomaly. But now that we're unraveling, we can take back a lot. We can have this, you know, 20, 30, 40%. It's fine. The market needs a healthy cycle. It needs some type of equilibrium. We haven't had it. So, you know, again, we have to be nimble to say, look, tech's not the place to be. You know, if you're buying stuff like dirt cheap, that's fine. But if you're buying tech, in my opinion, then you have to be willing to be committed and hold it for probably 1 to 2 to 3 years. I'm not joking. Some of the correlations I've seen with the data points in tech right now is we were at some multiples and some valuation levels that were as similar as the dot-com bubble in 2000. So tech is toxic right now, okay? Now, taking stabs is fine. Nibbling at some of those lows and dollar cost averaging is fine, but you're going to have to want to sit and hold for a couple of years. And if you have cash to trade, you have margin to trade, I'm going towards these sectors. I'm going to trade financials. I'm going to trade materials. I'm looking at things that are less sensitive to the rate hike, less sensitive to the tapering, less sensitive to the market volatility, and I'm going to use those. And I'm trying to trade less things. You know, I think last year I had like 60, 70 plus positions open. Like, I'm talking different companies that I'm trading in stocks and options. I'm trying to drill it down to like maybe 10 to 15, and just always watch them, always monitor them. You know, be willing to take ownership and churn them for profit. All right, it's not going to be easy. All right, it's going to require some active management. If you're willing to grind it out, awesome. Let's make some money. If you're willing to grind it out, that's how we make money this year. If you're thinking, well, I'm just going to hold it, fine. Then hold it and, you know, plug your nose, put your head in the sand, and don't pay attention to anything for the next 2 years, and you'll probably be fine. Okay? But do invest in crypto, you know. But if you're an active trader, you're going to trade Forex this year. Forex is going to be probably one of the best instruments to trade. Because right now, I mean, we're off to a great start. We've already had some positions. We've got some good volatility intra-week. And it's been nice to be kind of neutrally positioned and then trade what's fresh. Dollar strength, yen strength. We've seen it the last 2 weeks. We've had some good trades. Right? Does this make sense? Linda, are you asking LTC what? LTC like Litecoin? You want to take a look at Litecoin? Litecoin sitting at 106. I'm not interested in really doing much of anything on Litecoin. I have a position sitting around like 120. I've had Litecoin held from, you know, $40, $50 from a couple years ago. You know, as a whole, we just need to see cryptos in general. Yep, cryptos in general just need to do better. You know, if Bitcoin starts to stabilize in base, then we'll see the whole basket of cryptos, you know, maybe not thousands of them, but we'll see the top 15, 20, 25 caps. We'll start to see them go back up. You know, and that's what was exciting. You know, when Bitcoin rallied from 3,000 to 20,000, that was exciting. When we rallied from, you know, 6,000 or 7,000 to 60,000, that was hella exciting. So if we base here at 30, and our next explosive move is back up to 75, back up to 100K. I mean, what's funny is everyone's like so upset about the whole market falling, and it's not easy. It's not easy to look past, you know, the red. It's not easy to look past, like, every day I'm seeing like red. I've got drawdowns, but I'm still making money. I'm still generating returns, and I'm just holding. I'm holding. I'm committed. I'll grind. I'll lower my cost basis, and I'll take profits where I can. If I have a good week in stocks and options, awesome. If I have a great week in Forex, sweet. When cryptos respond and all of a sudden we're talking about this in a year or two and Bitcoin's up above 100K, awesome, right? But we have to plan for that. We have to be prepared, you know, emotionally to take this on and deal with it. So, you know, again, I have a video coming out tonight around 6 o'clock. I'd appreciate it if you check it out. I revamped my entire YouTube channel, by the way. So on my channel here, I've just spent a lot of time just gutting all my playlists. And so for every video, I'm going to have a little 2-minute preview. I'm going to start doing more like weekly videos, like shorts, like just a little 1 to 2 minute thing, topical stuff over the week. Live sessions like today will be posted here. You know, before those live sessions were up for about a week and then they were removed. I put them all back on here. So I've got all of these live sessions that we've done for the last year or so. I put them all in there. So if you ever want to go back and review a live session, you want to go back and see what the subject was, go back and take a look. You know, it's obviously like week to week that we do this stuff, but have a look. There's always little gems, there's always little nuggets in there. There's always live trading talk. So if you're interested, check it out. Trading, you know, trend trading topics, trading 101, trading indicators. I'm going to keep building those out as well and just keep adding more content to this channel. The one thing I've been upset about seeing is comments that are from bots. You know, it's like, I don't know where the heck they came from, but I'm trying to like flush them out. Real traders, real people, and try to get this channel back on the organic growth rate. And, you know, hopefully we'll see 5K here pretty soon. You know, 5K from 0 last year. That's a decent little chunk, but I'd certainly like to see some more organic growth. And all of you out there that are watching this, if you're in here live, fantastic. If you're watching it with recording, you know, a little like goes a long way. A like and a comment goes a long way. That real engagement on the channel helps a ton. So I appreciate it. Linda, would you dollar cost average at 110 and 100? Let me take a look. Linda, where is your overall position on Litecoin? So would I dollar cost average? Sure. Do I like Litecoin? Yeah. Here's what I'll say. Looking at the chart right now, Linda, if we came back to under $100, I would say this. Because I already have some positions running, I'm in at 120, I'm in at $40. My break even's roughly like $70, $80. If we come back under $100, then I'll probably do like $25 increments. Okay, and I'm willing to throw a few more dollars at it. But right now, with crypto kind of in the tank and underwater and just red across the board, I'm just going to kind of stick to Bitcoin and Ethereum for right now. You know, right there, those two coins, it's around 60%. Okay, it's around 60% of the market cap. So that being said, like Litecoin's up there. It's like top 20 or so, top 25. It's one of the more like original coins. I think there's still merit to it. But I just wouldn't want to get super, super heavy in Litecoin. I don't. So, I mean, because I know my position's already around like $70, $75, if we come back under 100, maybe over $25, a couple more, you know, trades, but nothing too big, nothing too crazy. And then still pay attention to the overall movement. If Bitcoin is basing, Litecoin will probably be basing. If Bitcoin is rallying, Litecoin will probably be rallying. Okay? So I think the whole crypto market is going to move in unison a little bit more this year after everything gets beat up. You know, maybe it's Bitcoin first and Bitcoin leads the way and then peripherals catch up. Maybe it's Bitcoin, Ethereum go together. Maybe it's the stock market after this capitulation is over with. The stock market stabilizes, rallies 3, 4, 5% like the history shows for 50 plus years. Okay, after the first rate hike in March, the overall stock market tends to produce about a 5 to 6% gain. Over the next 24 months from that first rate hike, the market produces about 20% gains. So this is no joke. I'm talking about real data here. Let me see if I have the screenshot. Let me find it. I know I have a screenshot that I can leave you with today that's super, super important to pay attention to. And just keep the data or the statistic here in your mind. Let me find it. So Fed. See if this is right. Inflation, no. Hikes. Here it is. I found it. Eureka. Okay, I showed this in my trading rooms this week. Take a look at this. Feel free to take a screenshot if you want. Here's what it is. The Fed rate hikes and forward performance. So after the first rate hike, you can see here that over the 12-month period rolling after the rate hike, the markets are averaging about 7% in that rolling 12 months after the first rate hike. So when is the first rate hike coming in 2022? In March, right? The Fed said it yesterday. It looks like March is a done deal. We're like 90+% probability with that watch tool. So 7% from March. Now, that doesn't mean that we can't flush lower. That means that we could probably drop, back down to the lows from this week. We could drop back down and capitulate more down to those lows and really have this like bargain where over the next 12 months after March, we have an elevated, performance. Like, yes, the market did perform better after the first rate hike was in. And that is the same old saying that we've had for many, many years. Buy the rumor, sell the fact, right? The rumor is the Fed's going to tighten. The fact is in March, they will tighten, okay? So the market flushes down. The market, throws this little tantrum, purges some of these crazy, high multiples and gains, finds equilibrium. And then after we establish that rate hike, now the market can digest and say, okay, we're past it. Let's move on. How do we get past? How do we start performing now? Let's get back to normal. So 12 months after, they typically perform pretty well with a 7% run. That's a 50+ year data point. Now, if we perform at 19.3% over the next 2 years after the first rate hike, you're talking about for the rest of 2022 and into 2023, we are essentially going to go right back to the highs that were just created this year, right? So again, keep this in mind, 7% and 19.3%. Let's go back to our SPY really quickly. And let's say that we end up forming a low off of this. Let's say that we call the exact bottom. If we call this the bottom right here, all right? If that's as low as the stock market goes right now off this low, and I don't think that's the case, but I'll just put it in there. If we perform a 5 to 6% rally, that gets our SPY back into this area here. So around 445 or so. Now, does that change? Is it like, oh, wow, look at this. Awesome. I'm so bullish in the stock market. No, that's a dead cat bounce. And we can see some volatility in here for the next maybe 6 to 12 months. Okay? Over the next 2 years, we produced 19.3%. Well, 19.3% does what? Traders, 19.3% gets us to new highs. And over a 2-year outlook with that 50-year data point, we can see higher highs in the markets. Okay? Now, how bad would this have to be? Would we have to be down to like 400? If we were down to 400 and then we went up 20%, that gets us right back to the highs. All right? So I'll say this. This could be an awful lot like 2015 and 16, where the markets went sideways and we had about a 15 to 20% range, and it took 2 to 3 years before the market finally broke and went higher. And so traders need to be ready to buy low, be ready to take profit, be ready to buy low, be ready to take profit. And eventually, sure, if things are right, the cream of the crop rises, you find good stocks in the interim, you build great positions, eventually, yes, we'll probably make some new highs in the markets. But I'm not planning on new highs anytime soon. I think that this top for right now is in. Okay? And so I think you need to brace for the downside. I think you need to prepare for some volatility and some more slides, and really think about what sectors you want to be in. Really think about what instruments you want to trade. Because I know what I want to trade. I'm going to trade Forex and be very active in Forex. I'm still going to dollar cost average in cryptos. I will nibble and dollar cost average in some of the big tech stocks that are beat up really, really badly, but I know that's going to be a 1 to 2 year hold. And I'm going to trade the lower volatility, less vulnerable stocks in the sectors that have the ability to perform better. And they're going to be boring. Okay, they're going to be choppy, but I'd rather see choppy. I mean, think about it. I'd rather see price do this, and not really go a lot of places than see price do frickin' this. Nobody likes to see this, unless you're short. Which we were. We were short the SPY, we were short the Qs, we straddled all this good. We made money, but that's a one-off thing. I mean, there's an inherent bullish bias in the market. I show that in the video today that comes out at 6 o'clock, 6:15 actually. But it's hard to say, like, why do I buy this when it just keeps going? If you do this, it's easy. Buy low, turn it. Buy low, turn it. Buy low, turn it. Okay? But when it's falling, you're like, I guess that it's going to stop. And you could be upside down a lot. And you're adding to a crappy position. So that's no fun. Okay? Let's see here. Yes, Loxley, thank you for reminding me. And yes, it did. Yep, it did get into a trade. Lox is asking about my dollar Swiss. We deployed it yesterday, and here it is. So here is let me bring up my chart. Hang on a second. You see that? So there's my stop loss. I've got a buy trade in. I've got my wave rider running. So yes, my robot did take a trade in addition to my manual trade, and I'm up a total on the dollar Swiss. So yes, it did fire in addition to my manual trade. So thumbs up. Okay, and then back to whose question was that? Is it also 7% increase for each rate hike, or is it just one? No. It's just after the first rate hike. So you're talking like we could raise rates in March. We could raise them again in, let's say, May or August, and then again in December. That's going to be, it's only counting 7% from the first rate hike. Just to show that, look, the market is doing whatever it can to price in essentially the entire year of rate hikes this year. That's what the market is looking to price in. Okay? But keep the perspective. That's a 12 and 24 month statistic. Okay? So for 12 months, essentially it means this. For 12 months, we just put in a bottom, right? But we don't rally to new highs. We put in a bottom, we stabilize, we stop the bleeding, tie the tourniquet tighter, and we survive, right? We kind of like, oh, finally, it stopped going down. That's what it's going to feel like for the next maybe 6 to 12 months. But for 2 years, you go into 2024 when the market's, officially priced all the stuff in, then we can start to see, where the outliers are of what sector's performing best, what stocks are recovering. Is it tech that's making recovery? Is it the FANG stocks once again after they've been beat up maybe 15, 20+%? We'll find out. But overall, the broader market tends to perform at 20% off of that first rate hike low. But there's always a very ugly, purge to get to that first hike because the market prices that stuff in early. Okay, one last thing I'll leave you with today before we go. I am interested in buying Tesla. Okay, I've been in and out of Tesla a lot. I'm just looking at this. I just kind of made up my mind. 750 and 650 and 550. Okay, so 750. Oops, not the interval. I just want to put text box here. So I'm going to dollar cost average in with some fractional shares, 750 and 650. Darn it. Text box, yo. 650 and 550. And I think those are some key levels that are right around the correction levels that I'm pretty darn interested in, okay? We have a yearly pivot way down here at $500. Does that get hit? Maybe. But if I position myself with 3 little entries here, okay? Let's look at the overall flush from this high in Tesla down to 750. That's a 40% correction. I think this stock all day long has like almost like a prophecy of at least a 50% pullback. Okay, now it could go deeper, all right? But I'm willing to say, like, look, I'm going to start building my position here around that 50% pullback, all right? And is Tesla one that I should hold and want to hold for the next 1, 3, 5 years? Yes. Do I think that Tesla, if I can buy it in this area, have an average basis of 650, and this stock in the next 2 to 3 years is $3,000? Heck yeah. Okay, so I was tempted to throw in some trades yesterday, but I'm like, you know what? 750, 650, 550 allows me to kind of capture this area. I think this is going to have 50% written all over it. So just throwing it out there, and we'll talk about an equities on demand. Okay, all right, speaking of, I got class in 2 minutes, everybody, so I'm going to go ahead and wrap it up here. Thanks a lot for being with me today. And again, little thumbs up goes a long way. Okay, if you're watching this live, I appreciate you being here Mondays and Fridays. If everything was smooth today with the AV and, you know, little fun with me being on the screen, cool. I just have to run it a little bit differently, but like I said, I'm trying to revamp the channel. I've got a video coming tonight at 6 p.m. Eastern time, so you will see it. I've got it scheduled to post, so if you want to check it out, feel free. It's like 14 minutes, but it's just taking this session and condensing it, having some fun with it, but just talking about what am I doing? How am I trading stocks and options? How am I trading Forex? And cryptos actually didn't really make an appearance in tonight's video because I talked about it so heavily with my top crypto stocks a couple weeks ago, right? But crypto is be patient, nibble, dollar cost average, and, you know, let's talk about crypto in the next 12 to 24 months. Besides, like, when's Bitcoin going to start going down? I don't know. We'll see it on the charts, right? But right now it's like, how do I get out of crappy stock positions? How do I repair some of my trades? How do I find, you know, gains? How can I find some stocks that actually gain this year? And then in Forex is going to be a great market this year to trade. Okay? All right, buddy. I'm going to go and wrap it up there. Thanks for being with me today. Happy Friday. Have a great weekend. We'll be back on Monday for the Pulver Report. Same time, same place, 9 a.m. Eastern time. And again, appreciate, like, subscribes, all that good stuff. Check out the video tonight. And have a great weekend. See you soon. Bye.